Hey, welcome back to the Consulting Mind. Today I'm going to share with you the top 5 things that you must know about the secondary market corporate credit facility, the SMCCF program. Let's start with the background. The program SMCCF was first announced in the 23rd of March in 2020. The major aim is to support the market liquidity and provide credit for large employers. And there is a two-page document named term sheet which describe all the program details, implementation schedule, what to buy, when to buy, and how to buy under the term sheet paper. And it was further revised with an effective date of 15 June in 2020. The initial fund allocation will be 25 billion for the SMCCF program and 50 billion for the PEMCCF program. The combined size for the two programs will be up to 1,750 billion. And here is a technical details that you have to be aware of. Since the Fed does not have the authority to take on the corporate bond onto its own balance sheet, it has to work with the US Treasury to open a special purpose vehicle (SPV) that can be purchased assets through the SMCCF and SM and PMCCF program. In short, it have to be a kind of bypass the law to make it happen. Secondly, let's move on to the eligible asset. There are three major types of eligible asset under this program. The first one will be the individual corporate bond with some requirement. It has to be issued by an eligible issuer with a remaining maturity date of 5 years or less and were sold to the facility by an eligible seller. The second type of the asset class will be ETFs, which major focus in the US investment grade corporate bond and some fall within the US high yield corporate bond. The third type will be the broad market index bond. In short, it means that the facility will purchase the individual corporate bond to create a corporate bond portfolio based on the broad diversity market index. And under this type of arrangement, it allowed the Fed to immediately begin buying some individual company bond in a much larger volume than previously expected by the market. Thirdly, the eligible issuers for the individual corporate bond. And there are two criteria for the issuer to be counted as eligible. The first one will be the business has to be created or organized in US or under the law of the US. And the second criteria will be it has to be rated at least BBB minus as of 22 March in 2020. Fourthly, the program duration. It will be ended by the 30th of September in 2020, unless the facility is further extended by the Fed. And of course, during these 3 months counting from now, the market will be watched closely on the Fed speech or the Fed minutes to have a understanding of whether or not the Fed will extend the facility, and it will likely to have a very large impact of the market sentiment. And here comes to the most important part. Why was the market so excited about the news, considering the fact that the initial capital allocation is only US dollar 25 billion, which is not a very big amount. The reason for that is it creates the imagination and the expectation from market that the Fed might further consider buying the junk bond ETF or even the equity ETF, just like the Bank of Japan. It was quite unusual for the Fed to step into the secondary market directly via this program SMCCF, as comparing to the traditional method, say QE. How the QE is done, let's have a very quick review on that. The QE is done when the central bank buy the long-term security, buy the long-term bond from its member bank. And then the member bank will further provide the credit to the economy and the borrower as the capital allocator and the credit allocation role. Therefore, effectively, the commercial bank is playing the role of the capital allocation and acting as the bridge between the Fed and the capital borrower. But now, With the program, the Fed has effectively stepped into the secondary market without the breach. So let's wait and see whether or not the Fed will have further action on this program.